Hey, what's going on, guys? It's Henry back with another video, and today I'll be talking about how to turn $500 into $1,000 or $200 into $400. Basically, how to 2x your money in a month every single month with a small portfolio. I'm going to be discussing 3 different strategies that I want to share with you today, and I think you're really gonna like what I have for you. Also, make sure to check out the free email newsletter I have in the description. I give some picks and plays plus value emails weekly there. And it also doesn't hurt to hit that like button and subscribe. Something I will discuss today is closing positions because many students ask me how to manage these positions for profits. Setting proper entry and stop losses is very important to risk management if you want to be profitable in the short and the long term. So people think that you need a large portfolio to make a lot of money, and I want to debunk that myth. I started with just $2,000, and what I'm going to show you today is exactly how I grew that small portfolio into what I have today, which is over $1 million. Warning, you're going to learn a lot, but you're going to have to stick through my examples and explanation, and preferably have a way to take some notes along with this video. It took me some time, but I think what I'll show you is the fastest way to grow a small portfolio. So as far as I'm concerned, this is the most important video you can watch if you have less than $5,000 to trade. Heck, if you have less than $2,000 to trade, but also even if you have more, but you want to get some wins in before you add additional capital to your portfolio, that's fine as well. Growing your portfolio from $2,000 into $17,000 like I did when I was a student just takes knowledge, understanding of managing and opening positions, and of course, proper risk management so you can cut your losses and ride your gainers. And the combination of these things will allow you to grow your portfolio, because it's not like you need to have 7-figure portfolio. As I mentioned when I started, that I was basically a broke college kid. I really just wanted to pay for my textbooks and have some money to eat out at Chipotle or something like that. And I thought that even if I could make a couple $100s a week, that would be my going out money, since I was broke and had no money in college. I never really imagined the power of proper option trading and what it can bring in for income. I'm going to show you 3 trades and pay it forward in knowledge on opportunities I see in the market right now. As soon as the market opens, I will be placing these trades. All right, so the first trade I want to show you is going to be on Tesla. All right, so I've opened up the Tesla options right here. Currently, the stock is trading for $747 per share. If I show you the chart right now, this is a very interesting pattern because basically we're seeing a lot of upward momentum. The stock went down to about $639 per share. As you can see, it was nearer the bottom of the Bollinger Band. It's way under its moving average, and it's pretty fairly low around the 39 mark on the RSI. So all of the factors point that Tesla was a little bit undervalued. However, we didn't know what was going to happen with the bear market, but now it's pretty clear that the trend has set in and Tesla's going up. So what my strategy was back when I was in college was to trade Tesla options, because Tesla options have so much premium that you can collect, and also Tesla stock has a lot of opportunities. Tesla is an example of a momentum stock where you can make 50% monthly returns, and obviously if you compound that on a monthly basis, you're going to over 10 to 20x your portfolio in a year, which is a very huge return. And that is actually what I did when I was back in college. I was very risky. I knew I didn't have too much to lose, so this is a risky strategy, but it is the best strategy by far to grow a small portfolio. It took me from 2K to 17K, then from 17K to 75K the next year. So I was able to 5 to 10x my portfolio on a consistent basis using this strategy right here. So the way that this strategy works is I'm going to be opening up a 2 option leg on Tesla. And because the stock has a lot of momentum going up, this strategy that I'm going to open up will involve selling a put option and buying a put option on 2 different strike prices. And these strike prices will be bullish. And what I mean by that is that I think Tesla's going to keep going up. By the way, I need to say that I'm just teaching you everything that I know. By no means am I a financial advisor. I just want you to apply this knowledge so you can get similar results to me, or even if you tweak it a little bit and have your own spin to it, if you're successful, that's going to be a huge win. So Tesla has a very predictable pattern. So the stock continues to rise. Yes, it does fall, but in periods where it's rising, it does really, really well. So it is pretty predictable that as long as it's in an uptrend, that you can sell put credit spreads, or you can sell put options that are out of the money. So right now, what I'm going to do is actually I'm going to go for a near the money put credit spread. So currently the stock is 747. And because again, going back to the chart right here, we see that the stock is rising. It's rising towards this moving average. Now, when I was trading back in college, this is a 5-year chart because I went to college a while ago, the stock continued to have an uptrend. So on a monthly basis, when I was selling put credit spreads, I was absolutely killing it because Tesla had a really big uptrend. So as long as you pick a stock that has a consistent uptrend, this strategy that I'm going to show you right now, and I'm going to pick the exact strikes for you so you can view how I do it, is going to be very successful because again, Tesla is in an uptrend, okay? Right now it has declined, but again, now it looks like it's going to be in an uptrend again. So now what I'm going to do is I'm going to go sell a put option, and I think that Tesla's gonna rise. Again, I don't wanna buy a call option. You could buy a call option. That's actually gonna be another strategy that I'm going to show you. But here, I'm just going to sell a put option, okay? I'm gonna sell a little bit out of the money, not that out of the money, gonna be a 740 strike price right here. If I expand this option right now, you will see that the delta is basically 0.5. So there's a 50-50 chance if this option is going to expire, under 740. However, again, I have determined that Tesla is in an uptrend, but use whatever stock that you want, whatever stock that you are bullish on. Now, the implied volatility is really good. It's very healthy. It's 81. That's very high, which is a very good thing because when you sell options, you want implied volatility to be high. You want the volume to be high. You want the theta to be high. Theta, by the way, is the time decay. This option is going to be losing value of about $298 per day. So that's a lot of money that you can collect, but that's if you sold a put option. I'm not going to quite sell that put option because that's a large account strategy. I'm going to sell a put credit spread. So first of all, I'm going to sell this 740 right now. So I'm going to sell the 740, okay? You can see here that I'm collecting $2,765, but I'm risking a whole lot. That is a problem. I don't want to have a max loss of this amount. And first of all, I'm teaching small account strategies, so you don't even have that amount most likely in your portfolios. So to dramatically reduce this amount, the strategy that I like is now buying a put option lower than the sell put that I just sold. So I'm going to go ahead and buy the next strike lower. So instead of 740, I'm going to go ahead and buy the 730. This option right here has a little bit lower delta. It has a high theta here as well, very good volume. So what I'm going to do is I'm going to buy this 735, and then once I buy it, my total credit has gone down a lot, has gone down to $240. But now you will notice that my maximum loss is $260. So basically, this is about a 50% return. This actually makes sense because the option is slightly out of the money. So it's basically about 50% of a return that I'm getting. Now I'm getting this return in just 1 week. So this is a 1 week return. What you can do is you can go for 1 week or 2 weeks. So that's why I said 50% monthly, because this is a risky strategy. You're gonna have some losses from time to time. Of course, that's part of trading, but this strategy right here is super powerful if you think a stock is in an uptrend. And this is the exact strategy that I used to go from 2K to 17K, and then from 17K to 75K the following year, because I was picking stocks that have strong momentum higher. And when I was making my put credit spreads, I wasn't risking all my money. So even when I did have a losing month on a put credit spread, I didn't put my entire account in it, but I did put a significant portion of my account into each trade. So right here, you can see that $240 coming from $260. Now, word of caution before I go into the next strategy that I'd like to double a portfolio on a monthly basis, that you want to be really careful when you're selling put credit spreads. When the momentum shifts, you may want to look at closing that position. So if the momentum goes down a few percentage points, and now you see that the stock is hitting one of your strike prices, I will typically cut my position at that point. And because what I've seen in my experience is when the stock changes momentum, that stock is going to keep going down. So I like to cut my losses very quickly. But if the stock continues to go up, I just hold the position, I don't worry about it, and I let it go into expiration, and then I collect my full 50% premium. Now, also another word of caution is you do not want to sell a put credit spread during an earnings event, because typically during earnings, a stock can have a very crazy volatile move, and you want to be protected and not have a put credit spread when there is an event like that. Next strategy I'm going to show you is when we see a stock that is basically moving sideways, okay? We don't think this stock is going to move up a lot or down a lot. We think that the stock is going to stay very stable. In fact, we want to pinpoint exactly where a stock pattern tends to leave its value per share, and then we're going to run an interesting strategy, which is going to collect a lot of premium as long as the stock stays within a specific range. The example that I'm going to use is going to be on Netflix. Now, Netflix has sold off a lot during earnings, but when it doesn't have earnings, the stock is fairly stable. The stock doesn't move a whole lot. So although the stock has gone down a little bit and up a little bit in a given month, it actually only moved 5%. And that is not that much for a very volatile stock that has amazing premiums, because the premiums that are factored into the options is probably expecting a more than 5% move. So although the stock is moving 5%, the options may have a 10 or 15% move baked in, which is really good because then you can make money off of selling this volatility premium. Off of selling this volatility premium, or lack of volatility would be a better word. So now what I'm going to do is the stock is currently trading at $192 per share. Let's just say we think it's going to trade about $192, maybe $195 now that the market is recovering a little bit. So I'm going to go for July 15. I'm going to go for a 2-week option. Now this is going to be a very interesting strategy. And although the strategy is a little bit harder to close, it can work out very well when the stock stays within a certain range. I wanted to show you the best practice that I also use is I want to make sure that the bid-ask spread isn't too wide. So right here, 785, 815. It's not ideal, it's not perfect, but it's also not too bad because the volatility here is 57. That's fine, and the volume is really good. And at the end of the day, this is a blue chip company, Netflix. So there's a lot of predictability in the stock, and the bid-ask spread is pretty good. What I'm going to do right now is I'm going to sell the 195 call option, okay? So I'm going to sell this call option. I'm going to make $800, but this is actually going to get a little bit tricky, so make sure that you take notes and pay attention here. This 195 is actually going to be my anchor. It's going to be the top of basically my Christmas tree, okay? This is going to look like a Christmas tree. This is going to be the top. This is going to be the area where I think Netflix will trade within, okay? I don't think it's going to trade too much lower than 195. I don't think it's going to trade too much higher. I think it's going to be around 195. Let's say that you think, Netflix or whatever stock, again, you can use any stock that you like. I'm just showing you the strategies that have worked for me, where I have made a lot of money, okay? So July 15 is the expiration, 2 weeks. And I do like to go out 1 or 2 weeks because not a lot can happen in 1 or 2 weeks, okay? I'm trying to go out more short-term in nature, especially avoid like any Federal Reserve meetings where they can raise interest rates or something crazy like that. But in a typical week or two, not too much can happen. So I do like making this trade right here. So again, I'm going to pick 195. That's going to be the top of my strategy. That's going to be my peak max profit point. Now what I'm going to do is I'm actually going to buy a 190 call option, and I'm also going to buy a 200 call option. Now, the only thing that I need to do is I need to go into this area right here of Robinhood or whatever broker that you're using. I do like Robinhood. They make everything super simple. I have a link for you in the description if you want to sign up, but otherwise any broker is fine. So in this portion right here, the custom portion, I'm going to hit this drop down menu and I'm going to hit custom unique ratio, okay? This needs to be a unique ratio. The reason why I want this to be a unique ratio is for each buy order, I want it to be a equal sell order. So we have 2 buys right here. So I actually need 2 sell orders. Now, once I hit 2 sell orders, my cost actually went down to only $43. Now, again, if I have one, it's $843. That's a whole lot of money. That's over $800. But now you can see that my max profit is $457. So I can risk $43 and my potential reward is $457. So this is a 10x opportunity in 2 weeks. So on a monthly basis, even if you get this right one time, that's going to be a 10x return, or in a year, that's over 100x return. Now, obviously, that means that you have to be super consistent, but this strategy is not so consistent. And the reason for that is because this is not always going to happen a 457% gain. That's because as long as you're right within this range, you will make some money. But notice right here, if Netflix ends at $197.82, then your expected profit is $174. So it's actually not $457. The only time $457 happens is at this very, very peak right here. But you don't actually need it to hit this peak or end at this peak to make some really good money. What can happen is you can stay within this range, okay? You can see $100, which is, more than a double on your money, or Netflix can go a little bit higher and go right here, which can be again $100, even if it's $198 per share. And sometimes you will be around this range where you can make $350 or even higher than that, right? But typically what I will do, and the way I cut my position here, or in fact, I should say the way I profit from this position when I take my profit, is when I've invested $43 and this position has turned into $129, which would be a 3x return. That is when I will actually look to cut my position. So I will set a limit sell here for a 3x return. So let's say I invested $43. I will then close this position at $129 with an automatic close order with a limit sell order, okay? So basically, once this position is 3x, I'm good. I'm done, okay? I don't want to get too greedy. However, if I do see that stock not moving too much, I don't see that much news coming out, I think the market is very stable, then I can actually keep holding this position and let the position gain value, because what's going to happen is as long as Netflix is going to stay right around this area, let's say it's $195, you do not want to close it at $195, because as long as it's right here, every single minute and every single day, this option position is going to gain so much value because it's in that sweet spot zone. So every single day that gets closer to its expiration date and it's staying within the zone, I would just keep holding this position. But that is a 50-50 play. Sometimes I do it based off of emotion when I think that the stock is not going to stay in this range, then I'm going to cut it for a 3x gain. But if it just stays very stable, then I may wait as well. So I typically play around with that strategy. There is no exact answer, so I do recommend that you play around and see what works best for you. Now, for the third strategy that I want to show you, I'm going to again go back to Tesla stock. So this is the strategy that I use to absolutely make crazy gains in my portfolio. This is actually the way that I was making $10,000 in college at one point. And this way was through buying some call options. However, it was not by buying expensive call options. I'm going to show you how to dramatically reduce the cost of buying a call option. So again, we have determined that Tesla's an uptrend, okay? But basically back in the day when I was trading Tesla stock, this stock was much cheaper. I was very bullish very early on before any even YouTubers came on the scene talking about Tesla stock. I've already had Tesla stock. I was super bullish. So what I was doing was I was buying call options, but I had literally like no money. I had like a few $1,000s. So, what I had to do was I had to do this strategy right here that I'm going to show you. So I'm gonna buy the $750 call option. Now this is a $4,000 position, which at the time would have been my exact portfolio value. So I did not have enough money to actually open up this position. Well, I did, but it would be very dumb of me to do that because that would be entirely all the money that I had, and that would be awful risk management. So see, what I like to do instead was I like to subsidize or make this cost a lot cheaper. So rather than paying $4,000, I would then go to sell a call option, okay? Now I would subsidize the call option that I'm buying by selling another call option that is further out of the money. So for example, I bought the 750, then I would sell the 760. So I'm gonna sell the 760 right now. Now my total cost would only be $473, but my max profit would be over $500. So basically turning $473 into $1,000. So I was able to double my money on a 2-week basis or a 1-month basis. You can see right here that during a bull market, you can absolutely take a few $1,000s into a 6-figure amount. It does depend on the market as well. You wanna make sure that you have your technical analysis right, you're picking the right stocks, and obviously you need the market to cooperate with you. But this is a fantastic strategy, and this took me not only from, a couple $1,000s to 6 figures, this strategy also eventually took me from a 6-figure portfolio to a 7-figure portfolio. I'd love to show you how to scale your small portfolio into a much bigger portfolio. Even if you don't have a lot of money, my Discord community has all my trades where you can follow along and grow your portfolio. I'm about to start a 5K to 15K challenge. So make sure to check out that first link in the description and book a call to talk about the challenge that I'm about to start using these small account strategies that you've learned today and much more.